welcome everyone to an exciting AMA here at DeFi Raiders. I'm Dejanik. I'm here with Julian. We're thrilled to have the opportunity to speak with Maz from Pickle Finance. First of all, thank you so much for giving us this opportunity to host you here. We think what you guys have built so far is super exciting. We're eager to hear about what's coming next. So with that, welcome. Thanks for joining us today, Maz.
Thanks for having me, guys. This is awesome, and yeah, thanks for the invite. Really happy to be here.
Yeah, cool. Our pleasure. So would you please go ahead and introduce yourself and tell us a little bit about your experience in blockchain and DeFi and your role within PickleDAO?
Yeah, sure. So, as my Discord handle denotes, my name is Maz. I work as the sort of head of business development and marketing for Pickle Finance. I've personally been involved in the DAO of Pickle Finance for sort of a year and a half now. My experience in blockchain and DeFi is, as basically an enthusiast when, 2017 rolled around, the bull market of 2017, I sort of first got into crypto and have always been involved ever since. I'm not necessarily a technically minded person, but I love kind of being around the space and learning more about it sort of every day, basically. So Pickle Finance has been around for 2 years now. We actually celebrated our second anniversary last week. So we were sort of one of the original DeFi protocols. You know, when there was the whole sort of food mania. So you had obviously the OG of sushi finance, but then you had Yam Finance, Pickle Finance, Popsicle, all these food related DeFi protocols. And so, yeah, we were kind of one of the original ones, and we ended up partnering with Yearn back in the day as well, Yearn or Yearn. And we were founded by sort of three core members. Two of them have moved on since, but the sort of main core founder, Larry the Cucumber, has remained and still leads the core team. So, as I said, we're pretty well connected within the DeFi space because of how long we've been around. But obviously, the bear market has hit us hard. So we've sort of been trying to build and sustain ourselves as well as we can, which I think we've done a pretty good job of, considering we've been around for 2 years. And there was a hack, sort of 3 months in, and we recovered from that. So I think in the grand scheme of things, we're kind of like a grandfather within DeFi, really.
Yeah, that's impressive. Would you tell us a little more about the hack and recovering from that, since you brought it up? That seems like an
Yeah.
interesting story.
Yeah, no worries. So I actually wasn't around when it happened, but we had a DAI strategy that managed to have, I think, 19 and a bit million sort of siphoned from it. So it was resolved it was resolved pretty quickly, and actually Andre from Yearn was the one that helped our team during this period to actually resolve it. And what we did was, obviously we solved the security vulnerability first. So we made sure that no other strategies were affected. But then what we ended up doing is, to pay back hackers, we created a token called Corn. And Corn gave you an entitlement to 5% of like Pickle Finance protocol revenues. And what we would do, so you would get a sort of a percentage share of Corn depending on how much of the jar was hacked. So if you owned 50% of that 19 million, you'd get 50% of the Corn tokens that were sort of distributed. And what we would do is each week we would buy back Corn with 5% of the weekly protocol revenues and then burn it. So it was kind of a way of getting that Corn to increase in price. And eventually, when the price got to $1, one Corn would then equal $1. And if you had say again 19 million of the Corn tokens, you'd then be able to get the whole hack paid back. So it was a way of sort of, in the long run, paying back users that had been hacked. And so far there is a dashboard that shows sort of Corn burn I think so far like 10 to 15% of the all corn has been burnt. So we've still got a long way to go, but it gave users the opportunity to sort of cash out or to wait until sort of they were repaid in full for the hack. So a pretty novel way of solving a hack and not leaving our users in the lurch either.
Oh yeah,
Yeah,
that's pretty smart to use another token to pay out the user. I haven't heard of something like this.
Yeah, it was. It's. I think it's the maybe the only time it's been done, and it's. I think when there was another hack recently, and a lot of people suggested following the same sort of formula that we have. Obviously, we're still away from getting people fully paid out, but it was it wasn't just a meaningless token either, right? We were buying back the corn and burning it, and so the price has been sort of gaining. I think it's obviously gone down. I think a lot of people have it eventually sold because it's going to take a year or so before it actually gets paid out, and sort of a time value of money thing. I don't know if it's necessarily worth it for a lot of people, but it's still there, and we still buy and burn every week.
oh, that's cool. That makes a lot of sense. Especially that you did it, as percentage of revenue versus percentage of profit.
Yeah, yeah. So it's straight from the treasury revenues, basically. So before we even pay out the core team or anything else.
Yeah, no, that makes a lot of sense. Do it at a level that it doesn't cripple the business, but it still ensures people, right, that there's a steady stream of income coming in. That's nifty.
For sure.
So actually, that's a good segue. So let's talk a little bit about the Pickle token. As I'd say, that's kind of uncommon for a yield aggregator to also emit a token, to farms. So
Yeah,
we
I
should,
mean,
go
sorry,
ahead.
yeah. I was going to say yes, it is. Yeah. Obviously, a lot of yield aggregators have their own tokens. So you've got Harvest, and you've got Beefy is the biggest and most well known one, and then obviously each side chain has their own sort of yield aggregators too. Even though we're on, I think 12 sort of different chains now. I think the main sort of reason that there's a Pickle token is sort of, well, it's twofold. One is the emissions help incentivize, obviously, people to invest in our yield aggregation strategies over so a Beefy or a Harvest. And we have a relatively high fee structure, so it's 20% performance fee. If you compare that to Beefy is they recently increased theirs. I think they're at 10%, and they moved up from 4.5. So 10% plus, I think they have a withdrawal fee of 0.5%. So to sort of allow us to sort of not get away with, but to justify a 20% performance fee, we also emit the Pickle token. But it's also there to sort of create a bit of a flywheel effect on the Pickle token itself. So there's a couple things that the Pickle token entitles you to. So there's a couple things you can do with the Pickle token. The main thing you can do is to lock it for DIL, which is kind of like a VE, a vested Pickle token. And so once you lock your Pickle for DIL, there's a couple things you can do. The first is you can vote on the emissions of the farms. So say you're in the die looping strategy for compound. If you have DIL, can vote to have more Pickle go to your farm. So it's a way to sort of govern emissions and to sort of incentivize you to have more DIL to get more Pickle. And so by doing this, you've got your Pickle locked up, so that reduces the circulating supply, should create more demand for the Pickle token itself as well, and an increased price. The other biggest sort of thing that you get by locking your Pickle for DIL is you get a share on all revenues. So 100% of protocol revenues go towards DIL holders, so people who have locked their Pickle for DIL. Currently, we're paying out. I can quickly just go on our app. I think it's something like 25% if you lock your, sorry, I'm just quickly having a look. If you lock your pickle for dill, we are currently at 19%. So that is paid out in ETH and pickle. So you can earn 12% ETH by Ethereum by locking your pickle for dill. So again, another incentive, and what happens is you should start seeing a flywheel effect, right? Where people lock up their pickle for dill, that reduces circulating supply, that then increases the price of the pickle token, and therefore then the farms that you're in, you'll get a higher APY because that pickle token will go up in price. And then you should see again, a virtuous cycle. So obviously that happened in the beginning when we first sort of released these features. Because of the bear market and things like that, we've been pretty stagnant when it's come to pickle price itself. But I would say that's sort of the core reason that we have emissions. We don't just have a token that is a governance thing, right? We pay people back in the revenues that we generate, as well as give people the option to incentivize different farms and to vote on various sort of initiatives and stuff. So you become a part of the DAO once you lock your pickle for dill. So it's a more complex system than just emissions itself or just having a governance token.
Yeah, clearly there are a lot of mechanics there. So so tell us a little more about the DAO. How decentralized are you? How long has it been DAO governed? Kind of history on that front.
Yeah, I mean, so it's we had a fair emissions launch. So just like Yearn, there was a sort of really high emissions schedule that could be farmed from day one. So there's no outside sort of VC influence in the protocol at all. So we're completely DAO run. We do have the core team who kind of look after the day-to-day operations, obviously, of the protocol, and sort of determine the direction of where we're going. But it's heavily influenced by the DAO. And so we have key sort of, protocol improvement, pickle improvement proposals or PIPs that people can submit through our forum that can then be ratified and voted on. So for things like tokenomics updates, so we recently had a tokenomics update around our emissions schedule and things like that. That all goes to a DAO vote, and obviously is the vote is binding. So if you own dill, you get a share of votes and major sort of proposals that go towards the DAO. But day-to-day operations, deciding sort of which farms to launch, deciding which strategies to go after, when doing biz dev stuff, it's like mini DAOs, right? I like to think of it as sort of basically a company in some respects. You've got your shareholders who look after very large decisions, and then the sort of core management who do the day-to-day running of things. But obviously, it's all on chain, so who's voted for what. And if the vote goes through over 50%, that's the law of the land. So yeah, we've been a DAO for our whole time, really. And the DAO shifts and changes, but we all communicate on Discord, and there's a lot of arguing sometimes, and it's a very passionate group of people. But that's why I think DeFi is so great, because you're allowed to have people from all around the world have these discussions. So yeah, the DAO's been running for a long time and still kicking.
Yeah, very cool. And yeah, I mean, I think right, governance and and social structure development is one of the places where absolutely DeFi is out in front of everybody else innovating.
100%.
So it looks like there's a pretty highly curated selection of jars focused on blue chip protocols. So what's your approach to deciding which jar strategies to build? Jars being vaults in Pickle Finance terms.
Yes, and I'm glad you called them jars. So I think we initially, when the protocol launched, the main thing was to go after blue chips. Obviously, with our relationship with Yearn, we focused heavily on strategies with them, and then sort of, this was back in the day when Sushi Swap, was at ridiculous valuations, and there was not so much controversy, and we were going after sort of jars that we knew would make, the protocol a lot of money and the DAO a lot of money. As yield farming has evolved, and I think as users have got more savvy, we have had to change our approach. I think yield aggregation at the start, people didn't really know what impermanent loss was. They didn't really know like how the APYs were structured, and people were just kind of releasing things, and we obviously wanted to give the best opportunities, but there were still inherent risks. And what ended up happening is I think users kind of started straying away from just traditional LP farming. And what we ended up doing is going, okay, well, we kind of need to have a lot more opportunities now for our users as new chains were arriving, new side chains, new cross chain things were going on. So we did a bit of what we called multi-chain, multi-layer strategy, where we went on to as many chains as basically we could and found sort of LP, single staking, looping opportunities, and just pumped out heaps and heaps of jars and farms, sort of like what Defi does, I guess. We found a lot of success with that sort of when we did that. This was about a year ago. But then again, the market changed, and I think we've kind of come back to a more curated, high quality sort of jar selection. So we sort of base it on, the feasibility, desirability, viability, triangle. We do a lot of talking to our DAO, understanding, that desirability standpoint. But I think we're now really focusing on the viability. Over the past, over this bear market, protocols won't survive, and we had a runway of a year and a half, which is amazing. We were very prudent with our treasury, but if we're not bringing in revenue, then we're not going to survive. So we're trying to go after high quality farms that we know that have good APYs and good TVL that people want to be in. So we sort of make those selections, and as the person, as the head of biz dev, I'm always sourcing and scouring for those new opportunities. But we're always open to partners coming to us and saying, hey, we have a strategy idea. Could we, bat it around a bit? So the people end up, coming to me, and that sometimes is where we get a lot of our new jars and farms as well. But we sort of go through a bit of a process to make sure, okay, is this worth it? Because, we only have so much dev time and dev time costs, and we want to make revenues, and we want to stick around, and we want to offer the best yield aggregation possibilities for users. So yeah, that higher quality is sort of what we're going after, and we're starting to look at sort of more complex strategies now, sort of like delta neutral sort of strategies, things that we think will get users really excited, and as users have got more savvy. So it's a bit of a mixed bag, but quality over quantity is now our kind of main game.
Cool, and that makes a lot of sense as a progression to go through. That's a cool way to get there. And I love that you threw out that you have a year and a half of runway. That's rarely something that comes up in DeFi planning, I find.
Yeah, I mean, we obviously had a treasurer role as our core. I think a bit of a side note, I think one thing we managed to do quite well is we obviously hold quite a lot of Pickle LP positions. But we don't hold all that much naked Pickle in our treasury. It's still there, but whenever we were making revenue, and that's similar for then other governance tokens, right? When just to go into the sort of mechanics of yield aggregation, right? Say you've got a USDC ETH LP on Sushi Swap. We take those sushi rewards, and then we have, as part of the performance fee, we have those sushi rewards, but we instantly turn that into DAI or USDC or some other stable coin, because we don't want to bet on that sort of that we don't want to take that risk. And I think that's something we've done quite well, is de-risked ourselves quite heavily on the treasury front. So yes, we have a runway of a year and a half. That runway, if we doubled our revenues today, we would be default alive. So that's where we're really trying to push to, because there's a lot of pressure on our core team if that runway just keeps getting knocked down month over month, right? And so we have a lot of full-time core team members, most of our engineers, and we want to make sure that they still have a job, right? So there's a lot going on. It's a complex thing, right? But yeah, a year and a half runway is pretty good. It's pretty good. It gives us a bit of time, and hopefully also a bear market comes back around then too. So yeah.
Yeah, no, good description of It is complex to transition from being funded to being fully revenue supporting.
Yeah, and that's the other thing, right? We've never had any VC funds, so no one has ever come to us with a large sack of cash and said, "Hey, use this to grow." We've actually just done it from a fair emissions launch, and the revenues we make. So, I mean, I think that's a pretty crazy story in of itself here, right? Every week I see that other protocols are shutting down, or their emissions schedule has made them go, their Gov token is now worth 99.99% of what it was worth at the top of the bull market. So I think we're all very confident that we have a product that is one that is financially healthy. We just need to start getting more users kind of on board, and as I said, high quality strategies, and shifting to those consumer demands is something we're really heavily focused on.
Yeah, that's very cool. And delta neutral and other risk managed strategies should definitely be a growth area given market conditions.
I hope so.
So speaking of trying to grow, we see that you guys are participating in Optimism's liquidity mining incentives. Would you like to highlight the opportunities that presents right now on that chain?
Yeah, I think this is our best opportunity for your users, but just for DeFi users in general. We're the only yield aggregator currently with sort of these high dual rewards on Optimism, and I think this is actually really it's sort of lit a bit of a fuse under our revenue butt, so to speak. We have been getting a lot of interest in the farms, but yeah, as you said, I'll sort of describe it. So obviously on Optimism we have a lot of yield aggregation strategies when it whether it's LP, whether it's Uni V3 auto rebalancing strategies, whether it's single stake strategies. So for example, on Velodrome, you can have an ETH USDC sort of LP pair, or you could have a Uniswap V3 auto managed pair, as well as like a Stargate single staking ETH, or ETH stETH sort of pair. So something that's a little more stable, with that doesn't incur impairment loss. So we have those strategies, right? Which what they do is they take the reward token and the fees underlying your strategy and reinvest them. So again, as I said, another example, so Velodrome, it'll take the VELO tokens, reinvest them into your LP strategy, as well as the fees that you make. So that sort of auto compounds and gets you a decent APY. But what we've done, we put in a governance proposal to the Optimism Governance Fund, and we received 200,000 OP tokens sort of last month. And what we've done is we've incentivized our OP farms with dual rewards. So what that means is we are emitting those OP rewards that we've gotten. So all those OP rewards have been put towards those Optimism farms, as well as when that we shifted some of our emissions to Optimism as well. So 15% of all Pickle emissions, so 0.15 Pickle is emitted per block, roundabout. It shifts based on a bit of an algorithm, but 0.15 Pickle per block are emitted at any one point in time. So, about 0.015 are now emitted to Optimism. And so these dual rewards have greatly increased the APY that you can get on our Optimism jars. So, when we first started, the APYs were crazy. They were like in the thousands of percent. Now they've stabilized to more of like the sort of 100% range. But, if you invest in an LP pair, or a really popular one is our RETH pool on Beethoven. You can get essentially like 40% on your ETH basically, which is crazy. And those Pickle and OP rewards are all yours. They don't get reinvested. We don't take a profit. They just go straight into your hands. So that program is running for the next year. Those emissions will not change over the next year. So the OP emissions will be the same. The Pickle emissions will be the same. So whether you want a stablecoin strategy in this bear market, you can get, I think I invested in the USDC farm, and I'm getting like 30 to 40% on stablecoins. So that's pretty amazing, really. If you want to take a base return of an average return in the stock market of 7 to 8%, getting 40% is on stablecoins is pretty amazing. So yeah, that's our Optimism sort of liquidity incentives program, and one that we're really excited about. And we're still looking, again, as I said, for high quality farms on Optimism to emit OP rewards to. So I mean, if any of your users have any thoughts on farms and strategies that they'd like to see, they can join our Discord, or just reach out to me directly as well. We're always trying to have the leading sort of yield aggregation strategies in Optimism, and we think this is a huge growth area for us, but also, I mean, a huge opportunity for DeFi users as well during the bear market.
Yeah, it looks like Optimism has a lot of the development right now, so it makes a lot of sense. It sounds like a great opportunity. So I saw you also offer synthetic asset jars. We actually had Matt from Synthetics in here a couple weeks ago, and we've talked to a couple of people from Lyra as well, and are big fans of what they're all building. Do synths present different opportunities or challenges to building a jar strategy, and how do you think synths will impact liquidity in DeFi as the category matures?
Yeah, so I mean, our synth strategies aren't that complicated, really, at now, currently, in our current state. For example, for Lyra or Synthetics, mostly what we do is we create sort of auto compounding strategies for the LP pairs themselves. So for Synthetics and USDC or ETH, like that LP pair, we've also done it for, in the past, we had to turn off these farms, but I can't remember exactly who did it, but you could buy Tesla as a token, attract Tesla shares. You could do the same for Apple. We would do LP pairs with those tokens as well, but we sort of turned off those strategies because the provider of those tokens ended up getting sort of shut down. So we've sort of never done anything too complicated with the synths themselves. There is, I mean, it's probably more going into my personal opinion now rather than sort of a representation of Pickle. But there is a lot of sort of concern around synths regulatorily. So we had to, and as well as reputationally, right? So we had to shut off, as I said, some of our LP strategies surrounding synthetic assets and derivative assets. And so they're an interesting opportunity area for us, especially. I think the fact that I can buy Tesla stock but not be an American or be signed up to an American exchange or broker is a pretty amazing thing, living in the United Kingdom. So I don't know, there's nothing currently on our roadmap around synths, but it is definitely an opportunity, and I think it's going to be one that sort of, if done right, can be the next sort of catalyst for a new wave of capital to flow in the space. So we'll be keeping our eye on it, but it's not sort of a priority for us right now.
Yeah, that makes sense. So then outside of DeFi, we see you have a partnership with a minor league baseball team, the Portland Pickles.
Yeah.
What great synergy. How'd that happen?
Yeah, I mean, it's a funny one. It's funny on the internet. Pickles seem to have a lot of like street cred. I don't know if when Larry the Cucumber, our founder was picking a food and a logo and a brand, he knew how sort of like how Pickles was sort of had such a good sort of brand reputation associated with them. They're like, they're quite memeable, I guess. So the Portland Pickles are sort of like a minor league, as you said, baseball team. And so I think we just commented on one of their tweets, and then we got in a bit of a conversation. And it's quite funny, right? We are, I think, the only DeFi protocol to sponsor a sports team. You've obviously got the crypto exchanges who do that, but as a DeFi protocol ourselves, we are very small in comparison to a Binance or an FTX, right? Our market cap is what, 3-4 million. So I think that was really cool. It gave them a bit of cred, and it gave us a bit of cred, and we played along with it. We created some NFTs with them, but it's really cool that a DeFi protocol such as ourselves were able to sort of bridge into the real world. I would say that it's interesting. I think there was some interesting things around reputationally for the Portland Pickles themselves being sponsored by us. I saw a few comments on Twitter every now and then of sort of, how could you be sponsored by a crypto firm or, DAO? I guess they didn't really understand what DAOs are, but how could you be sponsored by a crypto related entity? Because it's all full of scams and stuff. And so it's interesting when we branched out into the mainstream, we still were met with sort of trepidation from the mainstream. So I think that's, again, another thing we kind of alluded to before this call. Reputationally, there's a long way to go. So it's something we're going to continue doing, I think. So we'll just see what sort of opportunities it presents. But it's really fun, and the Portland Pickles are a really, really fun team. They have their finger on the pulse. So they were great fun to work with.
That's great.
This is great to hear. Remember, we were talking, Nick, about how to make crypto more mainstream. This is it. This is one of the ways.
Well, and if there's one industry that has figured out marketing, it's minor league baseball. They're marketing, right, one of the most boring natural products known to man. And I grew up a baseball fan. I'm an American. I'm guilty, but they know that it's boring, so it's full of games and it's full of other fun stuff that major league teams don't do.
Yeah, it's wild. They one of the things they did was they pretended to blow up a whale on their pitch. So obviously no whales were harmed in doing so, but Portland apparently had a whale get beached tens of years ago, and it was the anniversary of that, and they built a whale and blew it up on their pitch. So I mean, yeah, it is amazing. The minor leagues, they were a lot of fun to work with. As you said, if we wouldn't have had the capital, but say we did sponsor a major league baseball team, it would have just been the old boring sort of, here's your logo on a bunch of things, and here's a paid advertisement where we'll mention pickles and maybe they'll eat some pickles or whatever. But the minor leagues really, they took it to the nth degree, and it was really fun.
Yeah, that's cool. And I got to think that that's better for crypto than, right, another logo on another F1 car.
Yeah. I think everyday consumers have gotten sick of that too. So it's sort of how does crypto, how does it show itself not just as this, because all it really shows is, oh, hey, here's a bunch of companies and a bunch of people who've made money really quickly, and they're just trying to do everything to be seen, right? And so how does it go away from that image and that stereotype? And I think it's a grassroots thing, right? Sponsoring a minor league baseball team. The reason we did it was the Portland Pickles have actually quite a large reach beyond just Portland, but the people who really care about the Portland Pickles are the people of Portland who go to the games. And so, that's kind of grassroots marketing and grassroots outreach. And I think something that a lot of the big crypto companies don't, excuse my French, but they just don't give a fuck about that, right? Like they just want the impressions, they just want reach. And so, yeah, I think if DeFi can sort of be a little more grassroots, maybe that is the answer. I don't know. But yeah, it is something a little different, which is cool.
Yeah, no, I think it's a great approach to from my perspective to creating a market, which is what we're still doing, right? Just because there are so many multi-billion-dollar companies doesn't mean that there's a mature market.
Yes, no, exactly, and it will mature. I mean, it always gets the dot-com bubble comparisons, but I do really believe that we're still at the very beginning, and a lot of these firms. I think next year you'll see a lot less crypto logos on F1 cars, but FTX, Binance, those companies, they'll still be there, and the high quality stuff will sort of rise to the top.
Yeah, exactly. So Dev123 asks if you could tell us a little more about the NFT. Is there a benefit to holding them, or was it just a fun one-off?
No, that's a really great question. So we have an in-house artist called Fennec. So he's done a lot of NFTs for us in the past, but mainly they've just kind of been, how do you say, like sort of like promotional NFTs. But we recently embarked on a PFP project, and so that is in the next few weeks. So we're still touching up a few details and stuff, but. We will be releasing that PFP project based around Pickles. So after this call, I can share in the general chat, a bit of a teaser on what they look like. But there is actually a benefit to holding those. So that is a really great question. So as I said, we have sort of what's called a gauge proxy. So the thing that determines what the pickle emissions are and where they go, which farms they go to. So if I hold dill, I can vote, and my vote is captured within the gauge proxy, and sort of determines, as I said, where emissions for pickle go. What we have designed is for that gauge proxy to then sort of be gamified through our PFPs. So if you hold a PFP, you will get more emissions on the farms that you have entered. So as I said, if you're in a just a stablecoin strategy, you will get more like a higher APY from holding a pickle PFP. And we've then also related that to things like dual rewards, so to the OP rewards that we are emitting over the next year. If you hold a pickle PFP and you are in an optimism strategy, you will get more pickle and you will get more OP than people who don't hold a pickle PFP. So we're using it as it's obviously a fun thing to do. Fennec is an amazing artist, and they actually look great too. I think there will be people who want the PFPs just based on how they look, but it also brings sort of like a tangible benefit to the holder as well. And so this is just the first batch of PFPs, but what we'll be doing is sort of gamifying it a bit. So for example, if you're an original minter of the PFP, in sort of a few months time, that your APYs will continue to increase, and we want to reward sort of longevity of people holding. If you buy or hold like a special PFP, the ones that may be a little bit more expensive, you again will get more APY, and so we don't want to stop it at just sort of APY. Obviously, that's our core product. So, the kind of core benefit to holding a PFP and what we want to link it to. But as we sort of get into more strategies, as we sort of start expanding what Pickle Finance is, I think the PFPs will be sort of core in terms of sort of gamification and loyalty when sort of interacting with Pickle Finance. So yeah, great question. It's a really cool feature. I think we've seen a few other protocols do that before. Notably sort of Babylon Finance, who unfortunately had to shut down actually over the past couple of weeks. But one that we're really excited about. And as I said, I think once I share a teaser video, you'll see that the pickles look very, very cool, and they're quite like OG DeFi. They're sort of pixel pickles. So yeah, they look really cool too.
That's great. Those sound very exciting, and like a cool new additional focus for the business, right? Not a shift to a new focus.
Yes, 100%. It's an adjacency of sorts, right? Obviously, we hope that through the Pickle PFPs, it is able to raise a bit of funds for us as well, but we're not going to price them at crazy amounts. They'll be around 10,000, sort of like a classic, sort of initial PFP mint. But we're not expecting them to, we're not releasing this during the height of the bull market, so we don't expect them to necessarily fly off the shelf at 1 ETH each. But we do think there will be demand because of the look as well as the utility, and we have sort of almost 1,000. I think we are over 1,000 sort of DAO members. So I think a lot of them will be pretty keen to snatch one or two or maybe three up. So we'll see how it goes, but we're pretty excited about the PFPs coming out.
Yeah, that's very cool. That's right. Good built-in demand and one of the best possible utilities that you can offer. Everybody loves more yield.
Yes.
So do we have any more questions from the audience? Anybody? And let's see. I think my last question is, what else have y'all got planned for the next couple months that you're able to share with us? Any new chains planned or any things like that, or major new protocol adds for jars?
Yeah. So I've got a roadmap that, again, along with the teaser video, I can share in sort of maybe the general chat after we finish the AMA. I think the biggest thing that we have sort of under the hood working on right now is we obviously have a lot of experience in the VE token model, being sort of, I think after Curve, we were the second VE token. So we saw what Convex has done and lots of other sort of protocols have done in creating a liquid market for these VE tokens and sort of giving people max boosts through sort of locking and staking with these protocols. And we've wanted to build something for a while that sort of builds on this even more. We're lucky that our yield aggregation sort of business does create revenue, and it creates an opportunity for us to sort of focus that revenue towards sort of boosting strategies and giving people more yield in these VE token strategies. So we have a sort of a product that's already launched in a bit of a beta, I guess, called Binaries. And so they allow you to lock up your VE tokens with us, get liquidity, as well as sort of max boosted rewards on those VE tokens. And what we are doing is we're going to use sort of various strategies to further boost those rewards. So we're currently building out a binary for the balancer tokens, which you can now obviously block. So it's got a VE model now wrapped around it. So we're doing a balancer binary, and Yearn obviously just launched VE Wi-Fi. So obviously we have very strong relations with Yearn, and so we think, we know we're going to be building sort of this liquidity wrapper, this binary strategy for VE Wi-Fi as well. So that's sort of the main thing we're really focusing on at the moment, and we've got a lot of efforts to try and, we're trying to create a differentiated product too, not just another Convex fork, So that's probably the biggest thing. Then the next, as I sort of mentioned at the top of this call, we're trying to think of like, what are this, as I said, users in the space have gotten ever more complex. And I think that's an amazing thing about DeFi is you've got a lot of great financial literacy going on, right? People understand what impermanent losses. People understand that if you're holding ETH, it's a volatile asset. Maybe I want to be holding maybe I want to be holding a more stable asset. How can I risk hedge? What can I do to sort of ensure more yield but lower my risk profile? And so, as I mentioned, sort of things, these are more plans than sort of things being set in sort of code just yet. But strategies that are sort of delta neutral, especially with our Uni V3 auto rebalancing jars. A highly volatile market creates a lot more trading fees in Uni V3. And with our auto rebalancing strategies, we've seen at peaks, ETH USD Uni V3 strategies, we're getting sort of 130% APY just from the fees created. That's not even without Pickle emissions. That's not even with sort of OP rewards or whatever. But you still have to deal with impermanent loss. And when you auto rebalance the strategy, when you change the tick range, you lock in impermanent loss. So one thing that we want to think about is, okay, well, how can we reduce the volatility in the underlying asset, but still allow you to get that 130% APY? And so there are some strategies out there. It takes, I can say all this, but doing it in practice is incredibly hard. There's a lot of intense financial modeling that is needed to be done to be able to execute on these strategies. So that is sort of a work in progress for us. But we, again, as I said, we really want to sort of cater to the more complex, DeFi user. But even not the complex one, right? If we're able to offer a delta hedged or delta neutral strategy and you're earning 130% APY just with the click of a button, and that you will get that 130%. That sounds like a huge growth vehicle to me. So yeah, it's that sort of stuff that we're thinking about right now.
Yeah, that's very cool. It sounds like the VE token stuff, has the potential to enhance governance possibilities as well.
Yes, definitely. I see a question from Logus. I think just centered around if we're going to turn into an NFT and GameFi sort of protocol. I definitely say that might become an adjacency maybe, but I think we're a yield aggregator through and through, and that's our core business, right? So it would be a very long time before we moved away from that. But we want to, I think we do appreciate that Web3 NFTs and sort of GameFi tokenomics and stuff like that are, it's what users want. So we're trying to play into that definitely. But who knows? Maybe you'll be able to use your Pickle PFPs in the Yuga Labs metaverse one day. Who knows?
Cool, but I won't hold my breath.
Yeah, no, you definitely shouldn't. But yeah, as I said, we're continuously trying to adapt. I think it's funny, right? At the end of the day, survival is the thing that matters most, and we're trying to create a really sticky product, and so to ensure that we can stay alive and continue to offer great products.
Yeah, very cool. Well, good. I have one last kind of more comment than question, which is that I love the Pickle 101 page, and I wonder why every protocol doesn't do that. And if you would please link to that as well with the other things that you link to, I think that would be beneficial for everybody.
Sure. Yeah, definitely. I think so. The Pickle one, that's a funny thing you mentioned actually, because that page was created specifically for the mainstream users that we were bringing in through our Portland Pickles sponsorship. So we had in-game announcements, we had sort of tweets, we had our logo was on the field, obviously, of the baseball team, so of the Portland Pickles team. So yeah, we created that because we realized we're advertising to an audience that might not necessarily understand or get what we are and what we do. We definitely take it for granted in these sort of communities how much we actually know about DeFi and how complex it actually is. Yield aggregation is probably the 10th thing you say to someone when you're trying to explain DeFi. And before you even get to DeFi, you've got to explain crypto and blockchain first, right? So, yeah, we tried to simplify that as much as possible. And I think, yeah, as you mentioned, not many DeFi protocols do it, because I guess we do take for granted if you are interacting with DeFi, you probably have some experience in it or whatever. But I mean, I'm sure I'm not the only one here, but when I first started getting into DeFi, I lost a lot of money sending transactions to the wrong addresses, or interacting with contracts that I shouldn't interact with, or whatever. And it's come to be accepted as a trial by fire, which I think is a little bit bullshit, to be honest. I think DeFi protocols should try and make it as easy as possible and as user friendly as possible, even for those that don't understand the space at all. So yeah, I'll definitely link the 101 page as well.
Yeah, no, great answer. I agree completely. Right, we need to make it easier for everybody to get on board, and can't, right, the trial by fire stuff precisely doesn't lead to large scale adoption, and doesn't make us look good as a community either.
No, not at all. I mean, yeah, everyone, again, as we said at the top and throughout this call, we want the mainstream, we want users, but then we tell them, oh, but to be a user, you have to lose $1,000, by interacting with things you shouldn't interact with. And I think, as I said, I think that's bullshit. I think we need to have a bit more courage to actually put in the time to make things easier.
Yeah, for sure. Mix, do you want to ask something?
Hell yes, I do. How are you guys doing today?
Very good, thanks.
Awesome. Maz, great to meet you. Look,
you too, man.
So I am one of those newbies that you talk about, right? I'm kind of in this space for a very specific reason, and it's been really awesome. It's been really eye-opening, honestly. But man, you just came in here and swept me away with some of this. First of all, congratulations and bravo on the Portland Pickles partnership. I have, relentless, I think maybe me and Dejanic, and then also Julian. I know I've mentioned this to them all the time. It's like, Mark, when are you going to jump in? When are you going to start getting involved in the crypto space? And I run a business on the other side, right? On the other side, the non-DeFi side. And it's been real nerve-wracking because I know I want to get into it, but the fact that you guys have things in place that make it really easy for the user, or for people that maybe are just kind of getting into things. You mentioned another thing, wasting a lot of money on transactions you never should have done, or contracts that you shouldn't have been involved in, right? You're the first one to come on here that I've understood. I've understood exactly what you're saying, and I think it's awesome. So I want to ask you a question about the Portland Pickles partnership, and that is, was it a fiscal decision? Was it a fiscally sound decision based off of how much they fill out every game, or was this more of a decision based on wanting to mesh together the two worlds of finance?
So, I mean, that's a very good question. The decision was more so, I actually come from a bit of a marketing, I come from a marketing background. And so I actually work part-time on Pickle. So in the real world, I don't want to say the real world, but, in the world outside of DeFi, marketing, I guess, is maybe my bread and butter. I think the decision, we did obviously pay to be sponsored with them. It was actually,
right.
Not, it wasn't a crazy amount. It was one that was fiscally sound, I guess you could say. But the main thing we were kind of going after is, it was sort of more of a brand and reputation play than anything else. As I said, Portland Pickles have a very strong reach. They have a brand where it's quite tongue-in-cheek. And they were also probably going to be the only team that would be willing to do it, right? We're both pickle related and pickle oriented.
Right.
So, I mean, it kind of worked really well in that way. I think we did see new user growth. That it wasn't huge, and I think I unfortunately we can't track, because obviously in traditional marketing, whether you like it or not, tech companies can follow you wherever they want, and that allows advertisers to know exactly how their advertising is performing. But for us,
Right.
because crypto is anonymized, we can't really tell if you're a new user from Poland or if you're a new user from New York and you found us through some other way. So I wouldn't say that we had a huge sort of revenue impact, but I think also sort of going back to maybe the philosophical side of all of this, right? We wanted to show that we're not just some, the mission of Pickle Finance isn't just to be, a DeFi protocol that just goes along and, I don't know, makes money and is irrelevant. We do want to be a relevant protocol. We're not a company, obviously, we're not incorporated, but we want to be around for the long term, right? So how do we do that? We show that we're here to stay. We show that we're more than just a DeFi protocol. So yeah, there are a few reasons around it. There would have been a point where if the price was, more than what we had paid, then it becomes a tougher conversation. But sort of on the balance of all of that, we thought it was a smart decision to make.
Yeah, no, it sounds like it was a very smart decision to make. It kind of leads me into another question. I don't know how we're doing on time, but have you guys really scraped the bottom of that barrel? Have you heard any other mumblings of other opportunities to do the same exact thing with other, fiat money businesses?
No. So we've definitely sort of, I wouldn't say we've scraped the barrel, we've dived in.
Okay.
We could try dive in further, I guess. No other companies that are fiat based have reached out to us.
Gotcha. Okay. Yeah.
I think the next logical one that we've been looking at is sort of like creating merchandise and stuff like that, and that's sort of, I think, things that lots of DeFi protocols have done. So it's not necessarily that revolutionary. But yeah, no, there's nothing else we've sort of looked at. But I mean, as I said, I think this one was kind of written in the stars a little bit, right? A minor league baseball team, as DJ Nick said, like in a minor league baseball team, they actually do really wacky stuff anyway. So they were definitely more willing to partner with us, right? And I think we could offer, I don't know, some other baseball team maybe the same amount of money, but they might not take it because they don't think crypto is something they want to be associated with. So yeah, as I said, sort of it was a lot of fate came into the partnership as well.
Yeah, no, and smart move on the merch too. I'm very new to the crypto space, but on the music side, a lot of artists are like somewhere between 70 and 90% of their income is on their merch. So awesome. Hey, thank you for answering those questions so in depth. I'll let you guys get back to the crypto talk now.
No worries, mate.
Thanks for the questions, Mix. Well, cool. And thanks so much, Maz, for taking the time with us. This has been just fascinating, and what a great opportunity to hear from one of the OG DeFi protocols. Not something that happens every day.
Well, thank you so much for having me, mate. I mean, it's been really great, and I look forward to. Well, I probably won't rewatch the videos because I kind of hate hearing myself speak, but I'm looking forward to it. And great to be a part of the community too. I think we'll definitely share more things as we won't spam the DeFi Raiders Discord, but I'll definitely share updates as things come through as well. And this has been a great AMA. I'd say some of the better questions. Degenik, you actually did your research, which is something that doesn't always happen in AMA. So thank you for that as well.
Yeah, in our space as well, we're trying to innovate and up the level of everybody's game.
100%.
So cool. We'll post this to YouTube if anybody wants to hear it again. If you're hearing it on YouTube right now for the first time, please like and subscribe. And we've got a lot more like this coming.